Ooh, okay. I was what's up, Paul? We're having some troubles doing the dual live stream and spaces thingy, and my mic was muted on the live stream. So there you go. That shows the operation we got going on here. But Norfolk Southern seems to be moving off of this one. 5 minute candles. It was around 232, and now we're down at 219. So a nice little move down. And yeah, I hope everyone is excited. I just realized now I did that entire thing on mute on the YouTube live stream. That fills me with so much pain and whatever. But I guess that's what happens at 8:50 a.m. Eastern in the morning when we're trying to do this stuff. But Kevin, I ran through a couple of the news stories. It was a pretty light day for me. So far this morning, I've really only seen that Boeing plane, which had to land in Istanbul. Land is a nice word for it. And then the initial jobless claims data. I'm looking at Roblox earnings in front of me right now too. But Kevin, good morning. How are you doing today? What are you watching?
Good morning, Evan.
It's
Actually, I
embarrassing. I
believe,
just did that whole
if
thing
I'm not
without.
mistaken, they had another issue yesterday outside of the Istanbul one. I'll have to look that up. So many, it's hard to keep track here. Look, we had the initial jobless claims came in a lot hotter than the street's expectations here. Market's trying to bid it up. We're still negative when you're looking at the E-mini S&P 500. But we are seeing yields move back to the downside. We were trading at around 4.51 for the 10-year. Now we're down at 4.481. Dollars also moving to the downside here. So, let's see if the street's going to be able to break through that zero line and try to go positive on the session. Still early on. We don't have any more economic data for today that's going to be very substantial. I mean, we have a 30-year bond auction that should actually come in fairly well. We have member Daly speaking for the Fed. I don't think that's going to really rock markets at all. The ball's really in the bull's court. I mean, we had a very light couple of days when it comes to economic data, when it comes to news. And we've seen low volume days, and I'll post this chart. I just talked about it on the network, but I'll post this chart. But liquidity on the E-mini S&P futures is starting to come back in line here. So we are seeing market makers starting to participate a little bit, which could also dampen volatility, which we do see the VIX down. And then that could also create these ranging markets or even these trending markets if we get some positive data. So if we had low liquidity on the bid-ask spreads, then that could create a little bit more volatile markets, and that gives bears a little bit more the energy to be able to move, but that's just not the case right now. We talked about yesterday, we had earnings from ARM, seeing that stock sell off, weak full year guide. We had, who else was the one that was Airbnb? Sorry, Airbnb, good quarter, but they kind of adjusted their Q2 guide, kind of moving their revenue guide to Q3 or the revenue realization to Q3. And then, once again, once we saw that, market sold off here. But, the earnings, the numbers have been coming for the most part in line. The top line is a little bit suspect, a little bit weak than the street's expectations here, but bottom line has been pretty good. Guidance moving forward is a little bit weak when it comes to top line growth, and then we are seeing kind of the back half of this year. There's a lot of weight being put on the back half of this year. So let's see if we're going to be able to pull that through. But outside of that, Evan, that's kind of what I'm keeping my eye out on. I mean, we did see crude kind of get a little bit of a bounce, trying to break through $80. We'll see if that's going to actually happen here today. We had some positive data for the most part from the EIA report yesterday, some green shoots there. We did also see some data coming out from China when it comes to their imports. China actually had imports increase for the month of March, or for the month of April. I don't have the number offhand, but it was actually a pretty sizable. Oh yeah, crude oil imports for China actually increased by 5.4% in April, which is a really good sign. So. Some positive news there. We know that there's geopolitical risk. Let's see if it's going to be able to hold on. A lot of short speculators out there trying to move this contract to the downside. But once again, I think there's still a value area between 80 to 85. I haven't changed my thesis on that yet until I see some really hardcore proof that we are seeing it cracking. And the overall economy here in the United States, and if we are seeing, I wouldn't say deceleration of growth globally, but maybe slower growth than what we would have expected in the near term, that would be the two catalysts to really push us down. So that's kind of what I got on my end here.
Kevin, it was a little bit of a boring morning coming into this, and we were talking about it there. It's weird. It feels like we've been so nonstop over the last little bit. We didn't have too many earnings. Roblox and Warner Bros. Discovery are the ones that I saw. Maybe there's a couple others. I saw this Norfolk Southern move about the activist investor getting a couple board seats there. But besides that, there really wasn't a lot going on. It actually feels a little nice to get a kind of a morning off. Weird.
Yeah, man, I'm bored.
Yeah, me too.
I want to see some moves, man. Like, and like markets are going to do this. We can have range bound markets for a very long time too. I mean, if you look at the chart, we haven't really been moving to the upside or downside. We've kind of just been like a little stagnant over the last 3 trading sessions for the most part, which is okay, right? A consolidation. If you're having a consolidation before a breakout move, that's fine. But it's just, I would have expected a little bit more fireworks on the earnings front to be able to provide us that catalyst to the upside, and that's what I'm just not seeing. And I'm just a little bit concerned. I continue to bring this up. When you're looking at the E-mini S&P chart, we've had low volume on advancing days. You trust the price, right? Price is king, but volume gives you that secondary indicator of confirming a particular trend. We just don't have that yet, and I think that's kind of where we're kind of meandering between these levels. And once again, I think that we eventually will see a consolidation and a pullback, hitting the 200-day moving average, but I don't think it's going to be like tomorrow or next week. I think that's going to be a development that happens over the next 1 to 2 months. The labor data, it's the first print that comes in hot, right? So we can't take too much from it. And then you also have continuing claims actually moving to the downside in a sense. So continuing claims, I'm sorry, let me correct myself. Continuing claims came in lower than the street's expectations at 1,785,000, right? Expectation was 1,790,000. So that was good. But if you look at the revision from the last month, that actually went to 1,768,000.
Boba Fett, good morning, sir. Good morning.
1,768,000 up to 1,785,000 for this week, which is showing an accelerating trend, right? Around, let's say, 18,000 jobs, give or take, right, for the continuing claims. And if we start seeing this trend when it comes to initial claims, we talked about it a couple of weeks ago, that could push us up to, push up the unemployment rate. We just don't have not that much data yet, but I think it's something to keep your eye out on, and the market's going to probably cheer it on until it doesn't, right? Until we start seeing, 300, or when you start seeing initial claims coming in at 275,000 and things of that nature. I think that's probably when the market's going to start putting the brakes on, because once you get to around 300,000 a week, then that's going to really put some pressure on the economy here. And we continue to talk about the part-time jobs. Part-time labor is really what's been driving the job growth over the last 6 months, 7 months. And it's the easiest jobs to be able to halt when it comes to hiring. And I think that's what we actually saw reflected in the JOLTS data that came in lower than the street's expectations as well. We talked about that last week. So we're not there yet, but it does seem like there is some churning occurring in the labor market that we just have to be mindful of in the near term.
Appreciate those thoughts there, Kevin. Frank, I see you down below. Would love to get you up here and then hear what you're watching for the day so far. I did have a question while you were talking there, but I lost it as I was trying to do some other stuff. What's the latest on where we're at from like the banks and the financial side of it? I know that's an area that you've definitely had some interest in and enjoy talking about. We have any interesting things going on? Maybe like a little bit of like how XLF is doing versus a KRE? Nope. Yeah, KRE versus an XLF. Any differences that have been shaping up there with some of the largest banks in the world with more of the kind of mid cap size banks or regional banks, shall I say?
Yeah, that's a good question. So, the construction of the XLF, I say this about almost every single ETF that Spider puts out for their sectors. But so, once again, it's a horrible ETF because it's concentrated in Berkshire, JP Morgan, right? So those are going to be the two leaders. Berkshire Hathaway's done fairly well. I mean, we had their earnings announcement, and no runs, no hits, no errors there. They've been able to continue to be profitable. They got a lot of cash on their books, and their insurance business is doing fairly well, right? J.P. Morgan saw
Yeah,
a
Paul.
little bit of a
Kevin
pullback,
always
kind
has
of
great
an aggressive
takes. He's a
pullback
smart
when it
guy.
came to their earnings, but it's starting to level out. Actually, yesterday just filled a key gap. So
if you're new here, make sure you're subscribed to the channel, though.
Into the financials, and rightfully so, right? You're seeing rates kind of move to the downside for now. And then that's going to be a tailwind when it comes to the banks. Look, once the Fed actually cuts rates, that's going to be immediately accretive on the margin side for banks, for the most part, right? Meaning that they're going to be able to lower the demand deposit rates on the short end of the curve, right? The checking accounts, the savings accounts, what have you. The longer end of the curve, we'll see a little bit of adjustment, but not much, right? And they're not going to move them 1-to-1 to whatever the benchmark is going to be, which is typically either the 7-year, 10-year treasury around that level. Actually, when you're looking at the lending practices for a lot of basic financial institutions and home lending, they really don't price on the 30-year anymore. Like that's a thing of the past. They look at maybe the 10-year or maybe looking at the 20-year, but most likely they've been kind of targeting and pricing off the 7. So that should actually be a little bit of a tailwind for them. And I don't think the market right now has this huge expectation for them to be continuing to ramp up lending practices, right? Right now, there is some damage control. They're not really in growth mode. So I think that's going to be another reason why we might see a little bit of a bid for the financials. Do we have a CRE situation out there? Yes. Like, we all know that. But a lot of that's on the private equity side. And a lot of the risk from the regional banks since last year has been, for the most part, mitigated, right? There's been a lot of regional banks that just took the L and sold the risky assets off their portfolio. Others utilized insurance products to be able to buy those and provide, a little bit of downside protection. Think about it as like a put contract. They did that, spent the cash up to do that. So I think the banks, when you're looking at it from a structural standpoint, are decent. I'm concerned about the write-offs of credit cards, and I know we had Bill up here, a couple of weeks ago. We kind of had a back and forth and a friendly back and forth. I would say Bill and I are not on the same page for a lot of things, but I respect his opinion, and he respects my opinion, and I think that's what we need here on X, right? And I am concerned about the credit card situation that's happening with Capital One, and then also with Discover. When you're looking at charge-off rates exceeding 5%, 5.5%, Capital One, I believe their March month was over 6% for their domestic credit card write-offs. That's like very high. that's recessionary levels. And so I think we are seeing a cohort of the consumer being very stretched. You're hearing it when it comes to Starbucks. You're hearing it when it comes to McDonald's. You're hearing it when it comes to Walmart. And that's not a good sign. And so I think there is a little bit of a risk there, but the market, when you're looking at equity valuations, hasn't really minded so far. And until they do, banks are just going to trade like the banks trade. And right now they're trading really based on the back of yields, and that's pretty much it. So yeah, we're seeing a little bit of a
Morning, Matt.
Small caps. If we can get the regionals
Seems
on
dumpy.
board,
I'll ask Frank about that. I know he's an active trader.
But I think it's going to be a little bit difficult, though, for getting large institutions into that trade for the long term. And just because a lot of large cap companies, they can weather the storm. They have more cash on their balance sheet. Their reinvestment or their refinancing risk is a lot lower than looking at a small cap name that really does depend on the lending market in order to fuel operations. So there's some headwinds from the small caps, but the regionals are a big part of that when it comes to the earnings growth side of it. And if it can show earnings growth, which it should, the comps for the next three quarters for regionals across the board should be easily beatable. Like, you should see growth numbers, positive growth numbers across the board for all of them. And if you don't, then I would probably look at that bank a little bit suspect and reevaluate if you want to have that in your portfolio. So, so that's kind of my thing, right? Financials doing decent, right? Holding up. There are some underlying risks that are out there. I think the market's discounting them for the most part, but I don't think we're at any type of
Danaos is great.
crisis type of levels.
I have the recording being posted today.
Things just fall off a
hopefully
cliff. Are some regionals going to go under? For sure. But it's not like the first time that we've seen regionals go under. I mean, regionals go under almost every year, right? Like even when we have great economic times, there's just banks that just go under, all right? And you know, I don't think the market really cares about that stuff anymore. The market's pretty durable, man. Like I gotta just give this market credit. Like it doesn't care about it. I mean, I would make the comment. This is a joke, but like like what would move this market? Like a nuke? Like a nuke would be like the only thing I could see. And even then, people would probably be like, "Yo, double down." Like YOLO, we're not going to have money anyway if this is going to be really serious. So it's been very, very durable. I'm not sure what actually shakes this outside of a geopolitical event. It seems like anything that's financially related, the market's been able to soak up for the most part.
Kevin, I was gonna say that last point there. It's like, hey, I mean, either we're all dead and it doesn't matter, or this is a bottom and I make some money off of it. So one could say if a nuke goes off and we move down aggressively, I might be there buying, but who knows? I think that point is valid there, though, and I think what I've seen, Kevin, and I see Frank's up here. I'd love to get his thought. I don't, I don't know if it's any one specific event, but what I've seen is the market struggles to handle when you really throw three, four, five different factors and uncertainties at it. So I would lean more that direction and say maybe it's difficult to put in that one thing that's going to end up changing it. But if we have the conversation of like, hey, you have geopolitical conflict here, you have an election, you have this and that, and you throw three or four things in front of the market, that's where I think you start to see it tripping up and fail. And I know Frank actually likes to talk about that one a lot. So maybe if you have any thoughts on top of what I was saying in there, and Frank, of like, what could derail this market, and it feels like the only thing is multiple things.
Morning.
Good
How
morning,
you guys
Frank.
doing? Yeah, I'm pretty much on the same page as Kevin. I appreciate everything he says every day. And I'm like, it's like, boy, that's how I'm thinking. We've made a large move off that correction that we had. So, like, I think Kevin said it very well. I'm looking at used car sales also from a macro point. I think it's good something to keep an eye on. I've recently heard, like, it's the little things when you're just around town, you hear things. And I have two kids that are in their late 20s. They have some friends that are in some credit card trouble, I heard lately. So, not big, but, like, enough that, like, their parents are getting involved. So, like, and I live in a pretty wealthy area. So I'm thinking that there's some headwinds ahead. I mean, this number this morning just fell into place. Like, yields are near their lows over the last 2 months. But, like, it's going to take a lot for the 10-year to get below 4.4. I'd rather, like, go, like, narrow. Like, this week's been a tough week. As you guys saw, the market opened lower yesterday and immediately grabbed everything right back. I actually was long some puts yesterday.
What's up, Johnny? Yeah, a lot of earnings
like
moving us
9:30. I'm
down.
like running to my screen
I'm
to
up.
open it up just to cover them. I get these, like, you get that panicky feeling like, yeah, this is the only opportunity I'm going to get today to get these in. And here we are. We had the market came in a little bit overnight in NQ, and they bought it right back up. And those numbers, but, like, it's been a slow grind, and it's hard to short a dull market. I love the short side just because it's so quick. But, like, I'm being very careful here. I actually got up. I said, the afternoons have been really slow. I got up this morning. I actually bought some futures this morning, and I just sold them out. And my day's in, actually.
Nice.
So I think that, we're from a technical point of view, there's a big volume profile right here in NQ we're trying to get through. We get through it. Is there much more upside? We're 2% in Qs from the all-time highs. And the other thing that I'm looking at worries me a little bit is utilities. They've had a nice rally. IWM's had a nice rally from 190 to 203, 204 area. So I think it's getting a little long in its tooth, but, it could go higher. We could see this market, we're not far from all-time highs. Earnings continue, individual stocks continue to get dumped after earnings, but they're kind of grasping and regaining their traction right after their earnings The one that really stood out last night was Hood. They were great earnings, and everyone's raising their numbers on HOOD this morning. I think longer term, that's a great stock. And it was like, that was part of the meme stock in the 2020, and here we are. I think it's getting its legs. It's going to make some highs. I listened to Dan Niles last night. Keep it focused. It's the Mag 7. That's where we're at. That's where you're going to see the growth for sure. And they can correct, but I think we're getting a little long in the tooth. We'll see next week. And in the rest of the week, but like today, I think we could probably try to grind higher and then, flip a little bit. And it's tough to short this market because you get ripped up pretty quickly. But so longer term charts are putting in a profile where, we at some point we're going to get a lower high. If we get a higher high, then it's, who knows. But I think we're getting a little long in the tooth in this 12-day rally. So, we'll see.
I appreciate the thoughts as always, Frank. The Robinhood one was pretty interesting to watch, and I have the same general thoughts about the market and the space and everything like that. I do struggle a little bit with a broker, just given how great the incumbents are and how difficult of a space that is. But Robinhood definitely has something going for them. We'll see how that one moves today. Yeah, and I'm glad you enjoyed that Dan Niles interview yesterday. He's really great to have on. I'm going to try and get him on a little bit sooner this time. Last time we waited like 2-3 months, and this time I think I want to do a couple weeks and get some more of our friends involved and do a little bit more of an open Q&A as opposed to just the questions that we have. But I really enjoy listening to him. We're lucky.
Yeah, and I think you got a little bit of a, he even thinks Apple's cheap here.
Yeah.
So,
It's hard.
I think Apple, we're going to see it, higher. I think people hide in Apple. I think it's a great place to go with their cash flow. The buyback's definitely supportive. We will see dips in it, but, that's one stock that, the services they sell are great. Now, if the economy gets a little tight, people might start clipping and cutting those services. You have to look at that also in Netflix. But right now, it's, it's risk on for sure.
Yeah, he had some interesting stuff to say about Apple. So generally, he's not a fan of it. He kind of was talking about a lot of different things. Like he was pulling out numbers like their R&D spend to revenue and CapEx spend to revenue being significantly lower than a lot of the other mega cap tech names. He was saying something with Meta, like it was like combining their CapEx and R&D spend. It's like 40-50% of their revenue or something. So Meta is definitely investing more aggressively for the future than an Apple is right now, at least in percentages and not hard numbers. But what Dan was talking about a lot was the kind of WWDC event and the run up into it. Apple historically has been has a pretty set path of running up into an event and then selling off after it. This one, they're expected to talk about AI and announce some different stuff and this and that. So it actually could be an intriguing one. And as Apple is my largest holding and some copium there, I'm hoping we get some good announcements out of the AI thing, enough to make the market excited, but that would be out of the ordinary from what Apple events are. They're generally always the same thing of a run up into it and then a sell-off coming out of it. But I'm still excitedly watching that one. And for anyone who doesn't know, we interviewed Dan Niles on these Spaces yesterday. You could find the recording on the Stocks on Spaces thing, but I am working right now, clipping it up, and I'm going to get that posted so you can just listen to the hour of Dan Niles speaking. It was really a great conversation yesterday. He's always good to listen to.
Yeah, and you have to look at stocks like SMCI and NVIDIA as speedboats. And and Apple is an aircraft carrier, right? So they will eventually spend, but they want to know where all these other companies are. Their spend is, they have to spend. And with AI, Apple.
Good morning, user group. Appreciate you joining us.
You know what I mean? They're not. I don't think everyone's in a rush. I think Apple is such a big ship that they're starting with the AI and they're invested in the AI. But I think when they figure out what direction it's really going, I think it's early in the AI movement. I mean, I think we're only 2 years into a 10-year thing, 10-year progression that they'll eventually get on board and the ship will move in the right direction.
Awesome. Appreciate you as always, Frank. So I am now looking at the Catalyst watch for the day and some of the stuff that we should be watching. Kevin, we haven't talked about the Bank of England yet. I don't know if there's just nothing going on today, but I saw like 300 headlines about the Bank of England this morning from places. I guess it was the only thing being talked about. They didn't cut rates, but apparently they're signaling, "Hey, we're going to cut rates at the next meeting." It seems pretty likely there. Any big takeaways from the Bank of England talking about their monetary policy, which happened this morning at 7 a.m. Eastern? I saw so many headlines. I was like, what the hell is happening?
Yeah, no, I mean, it came mostly in line, right? Like, we knew that they weren't going to cut right now. The signal that everybody's talking about is their voting members. So let me go back two meetings ago. They had an 8-1, it's an 8-1 decision. So we had one person that wanted to cut rates. Market kind of got a little bit confused about that. And then that person basically got jawboned and said, hey, get in line. Next meeting, they all voted to hold rates. 9-0, and then in this meeting it's 2-7 for the vote. 2 to hold rates where they are, or 7 to hold rates where they are, 2 to actually cut rates. That's the signal. And so the market is expecting a cut by August, and then 50 basis points total for the year. That most likely will happen. Their biggest risk right now is going to be energy when you're talking about the UK, but we are seeing energy prices for the most part come down. But natural gas risk is a big risk over there in the European markets just in general, right? Huge risk. So we have to kind of keep that in mind too. And it does appear, from what I see on the geopolitical front, that Russia is definitely escalating. I think the comments from Emmanuel Macron is definitely an escalation or provocation. I mean, it seems like things are about to go down there. And that's another lever that Russia has is natural gas flows to the European Union. So that is something that they are keeping their eye out on, but they are seeing a disinflationary trend. So I'm not really too surprised by not only just the commentary, but the action that they took on the vote. So nothing groundbreaking with that meeting. I think it's still going to be the EU with the European Central Bank, what they're going to do next, and how Christine Lagarde really tries to frame the narrative. She does, in my opinion, a lot better job at framing the narrative and being completely blunt and honest with the street and what she's actually seeing, whereas we get more vague comments coming out from the Fed here. So I think that's the one to really kind of keep your eye out on. But yeah, a lot of headlines, but nothing that's shocking for me.
Yeah, there we go. The 7,000 headlines. I will say one more member of their central bank committee switching over. It is interesting that on ours, Powell, we don't know what actually how many dissenters there are until the minutes come out, which we still probably don't even know, but they all end up, it becomes consensus. And I wonder at that point do you think that's going to actually change for the Jerome Powell and the U.S. Fed? You think that as we get closer to the point where the meetings are quote unquote live and we're actually thinking about maybe cutting rates, you think that they're going to take away the need for being unanimous and letting kind of the market know how they're feeling, or you think that's just the ethos of what Powell is trying to do and they're going to always keep it unanimous and just make sure people change?
No, so that seems to be the culture right now. So the votes, when it comes to the Fed, seems like they're all going to be in line.
Yeah.
And I would not be surprised. Here's where they can show their vote, quote unquote, right, is in the dot plot. So the summary of economic projections is where, if you will.
Sorry about that.
But when you're looking at the actual vote for cutting rates or actual policy, they've been pretty unanimous. They've been unanimous. I think that's a structured thing, because once you start seeing split votes and things of that nature, it can be a little bit difficult and cause a little bit more volatility, and they do not want volatility right now. So that's something that's kind of been in place for, I would say, over the last 5 years, where we haven't seen like true dissents coming out. But once again, it's the dot plot that you really kind of, you see this. And actually, it was like the rate hiking cycle right before we started, where you saw at that point, I believe Kashkari was a voting member, where Kashkari had his his neutral rate like completely outside of the bands, even though everybody was like unanimous. But you could tell like he was making a statement that we need to hike rates immediately, and he was very vocal about that. And he's actually like the only member, maybe him and Collins are like the only members that really kind of talk about their own particular views outside of what the broader Fed is kind of thinking and their neutral rate policy, so or their thoughts on the neutral rate. So yeah, I don't think that we're going to see any sense. It's so like, especially this year, election season. No, that would not be good.
Yeah, so we do have all these Fed presidents speaking throughout the weeks and days, and I think that's when we end up hearing the dissent. So that's some fair points there. I do, I find it interesting or whatever, but I feel like the people who are going to dissent the most and most likely to get furthest away from it are non-voting members, and I personally feel like that's a strategy there of letting the people who aren't voting just to say stuff out there and probe how the market takes it. It's definitely an exercise I think that these Fed presidents are together in and doing it in the same direction to get more information, and it's something that I definitely feel happens. Do you think so? That sometimes these Fed presidents just say stuff?
Yeah, not anymore. Like if you look at the last couple of months, so and then I do have to jet for a little bit after this, but if you look at it, they messed up in October. Everybody knows that. Everybody that's listening right now knows that they messed up in October. Once they acknowledge the fact that the secondary market was doing the job for them, the day that they made that statement was the day people started buying treasuries again and trying to force the Fed to cut. And that's where they kind of lost their leverage. And that's because we had all these guys going out and gals, right? Going out and, disinflation, and they were doing their victory laps for something that they still had 100 basis points to be able to achieve when it came to inflation. They know they messed up. And actually, I'll even go a step further and say they messed up so much that they literally lost maybe 4 months worth of work because of the actions of their commentary. And if you notice ever since then, you don't see anybody veering off the path of the general message, right? You might hear some maybe type of statements like Cash Car the other day. I posted this because it was absolutely asinine in my opinion, right? We could actually cut rates if inflation is sticky. We could also keep rates flat if we are having some issues, or we can cut rates if we have this disinflationary trend coming back. It's like, dude, you just put all three of this. Everybody knows all three of those scenarios. You didn't provide us any good color, right? So I think, but they know that, and no one's gonna tell them that to their face. They should, but and I don't want to say they should speak, right? Transparency is key, but slow your roll because. In my opinion, we should have been done with this by now. This is what kind of pisses me off. We should have been done. October was great. That was in the bag. We could have been done with this situation by December, and we could have already had cuts this year. But their commentary messed that all up, and everybody wanted to be the hero and make the headlines. And unfortunately, they screwed up. They screwed everything up. They made financial conditions a lot easier without even having to implement any type of policy. And that was just stupid. So, no, I don't think literally, how many Fed speakers have we already had this week? I haven't seen I saw maybe a 5-point move, 2 days ago, briefly, off of a comment of we're going in the wrong direction, right? That was it. But the market doesn't even care for it anymore, and that's the problem they're going to have, because that's a tool that they had in their toolkit is their commentary. But now that the market knows, hey, your commentary it means absolutely nothing right now because we've seen you mess up in the past. The market doesn't even care what they're saying. And then Powell, and I'll say this about Powell real quick, and I'm again on the soapbox. Powell's press conference last week, I think that he didn't do a good job at the end of the conference, the press conference, when he discounted the fact that they were pretty much never going to hike rates again for the most part, right? Mm-hmm. In this cycle. That's not a statement that you should be making. You need to have that risk out there. The market needs to understand and feel that risk, because that's what tightens financial conditions. Once you take that off the table, you loosen tight financial conditions again, and you have consumers continuing to spend in the manner that they do, and you have companies continuing to spend on outside of AI and tech, right? You have companies continuing to double down on commodities and raw goods, and you see these runs on physical commodities now because of that fact. They are hurting themselves more than helping themselves. They need to rip this Band-Aid off and move forward. We should not be in a situation where we're in the longest period, I believe. Actually, I believe it's up until November. We're in the second longest period between rate hikes and rate cuts in the history. Second time, right, in the history. For a situation that should have been resolved a long time ago. If they were actually more aggressive on the front end, we would have been done with it. We should have been done with this thing in June of last year, honestly. So I don't understand why Powell made that statement that he did, because once again, we were almost trending towards 5% for the 10-year. Now we're back down to 4.5%, going below 4.5%. That loosens tight financial conditions again in a situation where commodities are just breaking. And I think that they're making another policy mistake just by the jawboning themselves. So I know I said a lot there, but I think we have to kind of understand their toolkit of commentary right now has completely gone out the window. Until Powell turns his statements around and say, well, that's what I was saying at the time. Data has changed, yada, yada, yada. We might have rate hikes on the table. The market's going to do what it's going to do. And that's, like I said, we should be completely done with this by now. And that's the frustrating part. But I'll kick it back over to you, man. I'll jump back on in about 5 minutes.
Honestly, Kevin, I'm probably going to end up ending the spaces anyway. So first of all, everyone should make sure they are following Kevin. We're doing these morning shows together, and market's about to open, so I'm looking forward to it. But if you have a second, everyone should make sure they're following Kevin. But you have any comments you want to get out there to end this? I'm sure we'll talk later on Power Hour, but anything you're watching for the day? I feel like I prompted you on a couple of the questions, but I don't know if you came with anything you wanted to specifically talk about.
I would say from a technical standpoint, like when we talk about the intraday trends, I like looking at the 15-minute chart. I think that's actually does a really good job in trying to find support and resistance areas. Right now, we're fading a little bit, and that's a significant area of resistance that we've hit 4 times over the last, day and a half or so at these particular levels. So I always like to keep my 15-minute chart up. I always like to have a 20-period moving average on it and a 200-period moving average on it. 200-period, really decent for resistance and bounce areas. 20-period moving average on the 15-minute chart, really good for showing and understanding where the trends are. And then kind of look at your gamma levels. 5190 is actually a really key gamma level right now. 5170 on the downside is a key gamma level. If we do have this compressed market, look for those to be your support at 5170, your resistance at 5190 to 5200. We break through 5200 on large volume. Look to see us hitting 5210 by the end of the day. So I think it's range bound action for right now. Based on the price action that we have, yields are starting to reverse that initial move for initial jobless claims. Dollar is kind of staying in line right now. So that's my thoughts right there.
Kevin, amazing as always. Appreciate you sharing your thoughts and opinions. Everyone should be following Kevin on the space. A little bit of a boring day from the news front, and we still had a great conversation on here. So appreciate you as always. And Kevin, we'll see you later and see you tomorrow morning on the space as well.
For sure, man. See you.
Appreciate you. All right. Hopefully we get some more morning show stuff going tomorrow, some more news. But like I said, this was actually a very good conversation. I always learn a lot from. I'm going to close down the spaces. For anyone in the spaces, though, I am currently live on YouTube, live streaming my screen, doing some other stuff. I'm going to go and join Jordan Spaces. You'll be able to hear that. But if you guys enjoy this type of content and want to support what I'm doing for free, go up in the nest above. Click into that YouTube link, that live stream. Subscribe to the channel, the YouTube channel. If you really want to see what I'm doing, hit that notification bell, that bell button, so you get notifications whenever I go live on YouTube. But that's the big thing I'm working on now. It's free to subscribe over there. That Dan Niles interview that I did yesterday with a couple others will be posted on YouTube, hopefully later today. But we'll see. Maybe it's coming tomorrow, but that will definitely be going up on the YouTube channel. It was a really great recording listening to Dan Niles speak, and I'm looking forward to it. The market did just open up, and I'm going to go and join into Jordan's live stream. But yeah, if you're in here, you're hearing this, go to the tweet pinned up in the nest above in the spaces, click into my YouTube channel. Minimum, hit the subscribe button, but come hang out with me for like another hour or so on here. And yeah, I will catch you all later. I'm gonna go Jordan's link if you're on my spaces. So if you're following me on Twitter, you'll see my account popping over there. But good luck to everyone. I hope the market moves in the direction that you want it to. That's priced for your portfolio. I'm seeing Airbnb moving a little higher at the open here, Qs as well, Spine, etc. But Sultan FF, hello. Thank you for saying hi in the YouTube live chat. So shout out to him. Shout out to everyone else in here. I appreciate each and every single one of you. Like I said, I'm going to go over to Jordan's link and hang out there for a little bit. So have a good one, everyone on the spaces. And yeah. All right. We are now muted over there. Hello to everyone coming over. I see we got a nice little jump up in the live concurrent viewers. I hope you guys are all doing well. Market is open. Airbnb with a nice little pump here at the open. This is the 5-minute chart. So that's a good one to watch. I want to get SPY on here as well. I am going to head over to Jordan's link, as I was saying, so you're going to be hearing some live trading going on in the background, but let's just level set one more time on some of the news stories and everything that I was watching this morning, and that space is now closed. Okay. This one was an interesting one. A lot of these Mag 7 executives are starting to sell some shares. We did also have Bezos and Zuckerberg, who's not included in here, but they're selling a lot. We had Roblox earnings this morning. Roblox, what's up? Koshin, I've seen you. You are in the Discord group, correct, Mr. Jama? Which one was I looking at? As we lag. All right, I can't move off of anything. We're gonna definitely drop some rates there, some frames. Let's join the spaces.
Let's see, what do we got?
That's pretty loud.
XPath. Affirms.
Oop.
Shark, did you swing anything?
No.
All right, computer's lagging.
I'm about to add to my car.
This is rough. If you're in here though, make sure you're subscribed to the channel. And like I was saying on that spaces, hit that bell button, get notifications whenever I go live. I'd love you forever. Very nice, very nice. My computer's lagging.
Right at the point of control and NQ. If we can hold above the 205, I would be looking for.
I literally can't do anything right now.
It was against your programming to go long.
No,
I
yesterday
added to
when
Microsoft.
she was here in the morning, the whole market ripped.
Oh, yeah.
So
Ooh.
everything I see across the board is 10-minute CBC short. That's why we're seeing that bearish reaction on NQ.
I literally can't do anything on my computer right now. I may just need to end the
Up
stream.
$50 per contract. I'm going to scale half on NVIDIA.
Oh, yeah, I'm ready. Okay.
What the?
I'm not in anything. Just waiting.
Market going green to red.
I want to see if
I
ES
can
sells
do
the body
something.
here. If they sell the body, I'm not looking at this as a bearish reversal. I'm looking at buyers to pick up price near the 10-minute 20 EMA. Sorry, my puppy.
Oh no, we can't hear it. You're good.
Oh, you can't? Okay, she's going crazy.
Do you have your thing off? Your like for me, I have the thing on the iPhone.
I literally
where
can't click
masks-
anything.
It only does you and voices.
Oh, probably. Yeah, I got my AirPods in, so it's probably just picking up my voice, which is good.
Yeah, that's why then.
All right. That's about it. Oh, what's up, guys? It doesn't pick up that dog. So it doesn't pick up G Knots' voice because he's got that dog in him.
Thank you, appreciate it.
Good morning, guys.
Good morning, guys.
Evan, I love how you came in. You know,
You know what's really weird? All of a sudden, my like the web browser just isn't working. I can't click anything, but everything else works on the computer except for the browser.
except for the who?
The browser, Safari,
Oh,
Chrome. I meant not
have you
Safari.
tried
Who
shutting
uses
it off and
Safari?
stuff?
Not yet because it's live, so that's gonna like cancel stuff. So I don't know what to
Oh.
do. So I might just sit here for 5 minutes.
Hmm.
Huh.
Do you have another browser?
I do. I could get Safari up, I guess, but then I'd have to be using Safari.
I would love to get longs on CLH on a bit of a dip.
How's CLH doing for you today?
Ripping. I'm short Carvana though. I just added to my puts that I swung.
Live
But
life
I'm looking
short.
to long CLH. No, damn it! I was looking at CLH last night, and I was like, bro,
I appreciate
should've
you,
swung long. I'd be
Sultan.
so
You're
paid
great.
right now. Fuck. Oh.
Honestly, man, if you enjoy the X account, I'm gonna try and make it to this YouTube channel is something you love as well. That's my real goal this year.
Watch Apple.
I'm trying to figure out the way to keep like what my page is with news and all that stuff while putting it into the YouTube format. So we'll see. We'll see how that goes, but I am looking forward to it. Okay, so here's what's happening here. I cannot move anything on my web browser right now. So this is a little bit rough. I did have to edit the Dan Niles interview anyway, so I can get that posted hopefully today. So I wasn't going to go for all day anyway. So I may try some different things here, close down my web browser, all that good stuff, and see where we end up getting to. But so with that involves me probably shutting down the live stream here. Maybe I closed the browser and we're still up. I have no idea. And if we are still up, F it. I will stay as live, but I am 99% sure this is going to close the live stream. But with that being said, I hope you guys enjoy these type of morning little live streams. I do the spaces with Kevin, and sometimes we're going to get Jag on there and so many other people with Frank today, helping you get ready for the day in the stock market, talking some different stuff. Keep it up. Oh, I can't even chat. I can't even chat to bump that. But yeah, so I'm going to keep doing these morning live streams. I think the goal is also to start doing some big earnings in the after hours one. So I would say we're still just at the start of the live streaming. I can't promise the all day, everyday things like yesterday, but definitely stuff like today, things that I'm already doing, the spaces. Being live makes a lot of sense. So going to continue trying to do that. I appreciate each and every single one of you. We're starting to get like a little bit of an audience here and a core group of people. User group's been here for a couple. Vadim, I've seen a bunch, and Paul's always in here, and Boba Fett saying hi, and a couple new people that I haven't seen too much. Johnny, WG, Koshin, Sultan. I hope you guys all have the bell button hit on YouTube so you get notifications when I go live, or at least subscribe. But yeah, more live streams coming. I hope you guys enjoy this one. I hope you enjoy all the future ones we're doing. Paul, if you're still in here, by the way, watch hours. Yesterday, we got up to... Let's check what we got up to yesterday. I think it's this one. Yesterday's all-day live stream, about like 9 hours, and we are at 114 watch hours on that one yesterday. And this one live for 50 minutes so far at 8.5 watch hours. That's pretty good. Johnny Boy, appreciate you following me on Twitter. Yeah, or X or whatever you want to call it. But Twitter's always going to be the home. I really do I feel like I know that platform. I love that platform. But we're trying to break into YouTube and do all that stuff. So keep it up on here and you will blow up on here. Yeah, that's the goal. That's the goal, is to continue it. I've never been like a full-on live stream person, but we're trying to get more into it. And I hope as the people who've been listening, you guys hear me getting a little bit more comfortable and enjoying everything. And this is a good time. I'm gonna quit yapping here. I'm gonna close down the stream, try and fix my computer and do stuff like that, and get to editing of that Dan Niles interview. Stay on the lookout for that. I will catch you all later. Now I'm gonna give it 5 or 6 seconds because there's a delay. I need to remember to do the low latency. Let me make a note. Latency. Okay, have a good one, everyone. Hopefully this might close the stream. This might not. Forsquit. Would be wild if we're still live.